When Warren Buffett, the Oracle of Omaha, speaks, the world listens. He's built one of history's greatest fortunes not by chasing trends, but by sticking to a patient, disciplined, and simple approach. Buffett's advice stands out because it's grounded in common sense and a proven track record. He believes anyone, not just Wall Street pros, can build wealth with a solid plan and discipline. His most famous advice? A straightforward plan he set for his own family. No complex portfolios, just a simple, actionable strategy. Buffett's philosophy: most people shouldn't try to beat the market or pay high fees for underperformance. Instead, own a piece of the entire market and bet on America's long-term growth. This is the heart of his 90-10 strategy. Simple, low cost, and built for everyday people. It's a plan that cuts through financial noise and empowers anyone to start investing for their future. Buffett's wisdom isn't just for the elite, it's for anyone ready to take control of their financial destiny. That's why his words matter. So what's Buffett's simple strategy? The 90-10 rule. Put 90% of your money in a low-cost S&P 500 index fund, and 10% in short-term government bonds. No stock picking, no market timing, just set it and forget it. The S&P 500 fund gives you instant diversification across America's biggest companies. The 10% in short-term government bonds acts as your safety net, stable, reliable, and there when you need it. This approach harnesses two key principles: long-term growth from stocks and risk management from bonds. The stocks drive your wealth, the bonds keep you steady. It's easy to understand, inexpensive to maintain, and proven to work for patient investors. No stress, no guesswork, just a clear path to building your future. That's the beauty of Buffett's plan. The genius of the 90-10 strategy is how stocks and bonds work together. The 90% in the S&P 500 is your growth engine. Over time, it's built real wealth for millions, but markets are volatile. That's where the 10% in short-term government bonds comes in. Bonds act as your shock absorber, holding steady when stocks drop. This cushion helps you avoid panic selling and keeps your plan on track. If you need cash or want to rebalance, you can tap your bonds instead of selling stocks at a loss. The result? Flexibility, control, and the discipline to ride out market storms. Historically, this mix has delivered strong returns while helping investors stay the course. The bonds won't make you rich, but they'll help you avoid costly mistakes. That's how growth and safety combine for long-term success. Talking about strategies is one thing. Putting them into action is what builds wealth. The 90-10 plan is easy to set up. Open a brokerage account online with firms like Vanguard, Fidelity, or Schwab. For growth, choose a low-cost S&P 500 ETF. VOO, IV, or SPY are all solid picks. For safety, pick a short-term government bond ETF like VGSH or SHI. Buy these funds in the 90-10 proportion, and you're set. The strategy is passive. Contribute regularly, let your money grow, and rebalance once a year if needed. This keeps your portfolio on target and takes emotion out of investing. No need for fancy advisors or complicated moves, just discipline and consistency. Anyone can follow this plan to start building their financial future. Simplicity is your greatest ally. The 90-10 strategy is powerful, but it's not for everyone. It's designed for people with a long-term horizon who want a simple, hands-off approach. If you're saving for retirement and want to avoid the stress of stock picking, this could be your answer. The main draw? Simplicity and low cost, just two funds, minimal fees, and no guesswork. You're betting on America's growth, not trying to outsmart the market. But remember, 90% in stocks is aggressive. You'll see ups and downs, and you need the patience to stay invested. If you're closer to retirement or can't stomach big drops, consider a more conservative mix. Ultimately, Buffett's plan is about discipline, not prediction. If you want a proven, straightforward way to build wealth, this strategy deserves a look. You don't need to be an expert, just consistent. Sometimes the simplest plan is the most powerful. Show your support by liking and subscribing for more informative content.